Hello, world.
What's up, guys? Welcome to our little live. Welcome to our quick Florida real estate podcast. I'm Maciek Zaremba.
And I'm Brian Wacnik.
And we're going to talk about some important things that are going on today in the Florida real estate market. So, Brian, we talked a little bit before we started here, and we really have a problem with insurance, it seems like. But specifically, Citizens, which a lot of you know is like the insurer of last resort, that's what they call it. It's like the government-run insurance. What have they done recently?
So, yesterday we got an email from the Florida Realtor News, and it had a link to an article that explained that right now, or over the past little while now, Citizens has sent out 300,000 letters to people who currently have Citizens policies. And these letters are offering them the opportunity to transfer their current policy into a private insurer's policy.
Okay.
Now here's the catch though. If you don't call Citizens or your insurance agent and tell them that you do not wish to be transferred, they're going to transfer you.
So they're giving you a opportunity to move to a different carrier, which is probably going to be more expensive, I'm presuming.
Yeah, so there's already been tons of cases, and I did a video yesterday and put it on my TikTok and Instagram, that kind of stuff, and the comments are very, most of them are really informative. Some of them went a totally different direction.
Yeah.
And but there's many examples of people with, maybe they're currently paying $2,000 or something like that, and this new quote's for $3,500 or
okay.
There were some examples that were way more. One of them, I think I calculated, it came out to like the new quote was 78% higher. Wow. So if this person didn't actually call their insurance person and say, yeah, no, I don't want to do that, then
automatic.
That would just automatically happen.
Wow.
Yeah.
That's unbelievable because, the real problem there is actually, it seems like, okay, I just have a higher bill as the problem. But in my opinion, it's when you have a mortgage that's the real problem, because you're going to get that double punch in the face, right? The first punch in the face is, here's your renewal. It's a lot more. Let's just say it's $1,000 more per year. But then when your escrow adjustment happens, your escrow is going to be short. And they're going to charge you not only for the shortage amount, but then they're going to need to start saving more for the future. So that's the second punch in the face, which will, of course, expire. It will, after 12 months, 13 months, it will come back down to a higher amount than it was before. But answer your letters, guys. Read the letters. No one wants to see, letters from Citizens anyway, but unless you're getting that payout check from some claim. But, it's important to read this stuff.
Yeah, and the scary thing about it is I think about myself and grabbing my mail when I get home, and I take the mail out of the box, and then I look, and if it doesn't look important, it doesn't even make it in my house. It goes right in my recycling bin. I don't even open it. So,
yeah.
So it seems a little strange that mail would be the only way that they're reaching out to these folks. But hey, man,
right? And that is like
I'm not a conspiracy theorist.
but you know what? There's going to be a lot of people, even if only 5% of the people that get that letter don't see it. It's still 5% of people that get, that kind of are getting shafted, right? They got a quote, they prepaid for a policy, they committed, and now they're being told, by the way, sorry, we got too many policies. You're going to be moved to a more expensive carrier unless you tell us you don't want to. Now, aside from that, there's another problem with this process, right? And that is the pricing. What is it about the non-renewal possibility? Because not everyone is going to shift to this new company. A lot of people are going to reply and stick with Citizens. But then what position are you in?
Sure. So, and I kind of just went through this myself on my own personal property a little bit. But basically, if you decide to decline, according to this article, if you decline and you want to stay with Citizens, if the policy that they offered you was 20% or less than what your current policy cost,
Okay.
then they will not be renewing your policy with Citizens once it expires.
Okay, so just quick example. You have insurance for $1,000, which nobody has $1,000 insurance. But let's just say for this example, you have a $1,000 policy with Citizens right now, and they send you a letter of opportunity saying, hey, we found a different carrier for you. It is $1,300, so it's 30% more. You reply and you say, no, I'm sorry, I choose to stay with Citizens. Then it sounds like they should be renewed with Citizens. Is that correct?
That's what my understanding from everything I've read about it. I've read quite a bit about it.
But if it's $11.89, which is under 20%,
right,
then you should expect a notice of non-renewal. Is that right? Does that sound about right?
Yep. Then you're done. You're done with Citizens.
But
so then there's more things that this is like dominoes, right?
Exactly, because the next part of Citizens, which I'm pretty sure you know about, but the next part with Citizens that I did a TikTok video on is, and it performed well because people are a little shocked with this ruling, but this is from about a month and a half ago, is the mandatory flood insurance for Citizens policies. So my home is built in the mid 80s, and I'm not with Citizens, but I have a feeling that on my next renewal at the end of November, I'm going to be non-renewed because that's just what they're doing with a lot of homes from the 80s right now. And the new rule, if I was to sign up and Citizens has, the rate that I choose to go with, the carrier I choose to go with, they're saying that, hey, now that you are with us, you're eventually going to have flood insurance. And I'm going to say, but I'm in the X flood zone. My lender doesn't require me to have flood insurance. And they're going to say, great, thanks for sharing, but we don't care. You must get flood insurance. And then they base it on the rebuild cost. Like you're insured for a certain dollar amount, and obviously that's not your purchase price because your land is part of the purchase price too. It's based on the replacement cost estimator. And let's just say like your house is at $460,000 replacement cost. They have a tiered approach. And next year, January 1st, 2024, I believe it was $700,000 or more replacement cost. All of those policies are mandatory to provide flood insurance, which is not cheap, by the way, right? That's going to cost you $2,000. Then the next year...
Is it though? Is it going to cost $2,000?
Well, with, which flood insurance carriers are out there now, right?
If you're in zone... And listen, everybody, I am not an insurance person. I sell real estate, right?
Yeah, me too. Same thing.
So if you're in zone X...
Yes.
Or S. Mm-hmm. Or X500.
Yeah, X500 and X is what we see locally here.
Yeah, we see S once in a while as well. If you're in those, typically, I'm not a mortgage lender either, you're not required to have the flood policy. However, like I live in X, zone X, and I have a flood policy, a rider, and it's $350 a year.
Sounds to me like you got it 5 years ago and you've been renewed.
Yeah. So
exactly.
It costs more now.
Go buy one now.
I don't want to.
Completely different way of reassessing the risk.
Uh-huh.
And in 2021, they updated the floodplain levels. So your elevation certificate is based on old data. Now you'd have to get a new elevation certificate. There you go, spend another $700 just to get the certificate so you can get a quote that's much, much higher than what you're paying right now because there's new rates associated with that. And maybe your company is no longer writing policies. Maybe they're just renewing policies as they slowly creep back to get out of this Florida market because apparently it's a high-risk market for insurance carriers.
Yeah, well, we have stuff that comes here. We have storms that have names and they seem to visit a couple times a year, right?
Yeah, exactly.
So I get it, like totally. I don't look at any of this though as being a problem. Like,
okay, let's talk about that.
I think that there's one group of people I could think of the most that this is a huge problem for. It's a terrible problem. However, for people moving here, people moving to Florida, right? I don't know about you. I'm guessing it's kind of the same. The buyers that I work with are usually coming from New York, New Jersey, Connecticut, Massachusetts, Illinois, and now California, and Oregon and Washington. Yeah. And I don't know about Oregon and Washington, but let's just leave those other ones. Let's stop at California. I ask them questions. We get to know each other. And the reason I don't see this really as a problem is because, one, if those people were homeowners, which most of them were, they're selling and they bought low and they're selling very high, right?
Yeah, that's true.
I mean, the average home value has come up nationally quite a bit. We're experiencing inflation, all this stuff. But the reality is you buy low, sell high.
Yeah.
Right.
So what are you saying? They just have so much money? It doesn't matter if their policy goes up double?
No. I'm saying they made a lot of money on that commodity.
Yeah.
And one of the reasons they might be leaving is because they're leaving a very high tax state. You know,
okay.
I've seen houses in Illinois that were only $700,000 with like $28,000, $30,000, $42,000 property tax bills.
Mm-hmm.
So I look at the motivation besides just living here in paradise, but economically, you know, and even when I think I did see a comment. There might have been a comment on the video from yesterday where somebody went from $2,500 to $10,000 on their tax insurance, not on their tax, on their insurance premium. That's the difference. So $7,500. So
I've never heard of anything even close to that kind of increase.
So it was like $10,000, and who knows? Maybe everything writes on the internet. People write on the internet isn't true. I don't know, right? So, but even at $10,000 for insurance on $1 million home, right? I mean, if you're leaving $40,000 a year in taxes. And the property taxes on the $1 million home here are how much?
Taxes, I mean, what is it, about like 1.5% maybe, $15,000?
So 15 grand?
Yeah, maybe.
And then another 10 for the insurance?
Yeah.
So,
well, and I understand that logic, but not everyone is moving from high tax states, right? Let's talk about our fellow Floridians.
Right.
Okay, now there's young couples, you know, getting married, or maybe a couple siblings, brothers moving in together, they want to buy a house or something, you know, this happens, right? And, or just like, you know, kind of entrepreneurial like young adults.
We're very old.
That are, yeah, exactly.
88 years old combined.
That come in and they want to buy a property and maybe rent out, you know, some of the rooms to offset the expense, right? So great. So those people are used to the Florida earnings and Florida expenses. What happened in the last 3 years? Rents close to doubled. Properties, you know, maybe 1.5, right? Maybe some areas doubled, but pretty much 1.5. At least those intro level houses where you're like spending $300,000 to under $400,000, let's say, right? So those people, if they're just going into the market, if you just come into the market now and you're like, okay, I've saved up 3.5%, I want to do an FHA loan, great. I have a job for 2 years, I'm pre-qualified to buy a home, and then you find out that not only is your insurance a lot more than you were expecting, but also you have to get flood insurance because you're buying a house from 1971 and you're doing an FHA loan, which also has some additional premiums associated with it. And then, you know, it's like an older roof or something, so now you're forced to go to Citizens, right? Because an older roof, there's not many carriers left that will underwrite that. And now it looks like your escrow portion of your payment, it could possibly be bigger than your principal and interest. And I think that's a problem for new young home buyers getting started. You know, any ideas for them to get into home ownership?
Definitely.
What you got?
I mean, so if we're talking it from the standpoint of being right here in Sarasota, I know you like to talk about Florida, but I'm here.
Yeah, I'm here.
And
Let's talk about Sarasota.
And this customer you just talked about, we're going to Northport. I mean, I just looked at a beautiful home in Northport, $235,000, completely renovated, fenced-in yard, not a flood zone.
Nice.
Brand new AC, brand new roof, brand new fence.
Yeah.
Right? The hurricane helped get all that new stuff.
That's right.
So I just think they got to put a little bit more money in their gas tank.
Mm-hmm.
And listen to an audiobook or something on their drive to work.
And commute a little bit, which is very common, right?
Now, the group I'm really concerned about, though, that I think this is, you're talking about entrepreneurs and young people. I'm 44, I still consider myself kind of young. I know I could always make more money. If I need more money, I'll do what I have to. I'll drive DoorDash. I'll deliver pizza. I'll
do whatever you got to do.
Yeah. There's a million things I could go do to go make money. It's just about hustling, right?
Yeah.
The people I'm concerned about are the retirees who are on fixed income, right?
Yeah.
Who had budgeted so much money, and they're in a fixed rate and a fixed term on their mortgages.
Yeah.
But then there's these variable expenses. And I think that this is the biggest. This might be the group where that this is going to hurt the most. It's scary and it stinks. Yeah. That stinks because people they save all their money and they make good decisions or bad decisions, but somehow they're able to make themselves here.
Yeah.
And say, I'm going to retire in the sun, in paradise. I'm going to go to the beach. I'm going to play pickleball and smoke cigars and drive convertibles.
Yep.
And
I have a client that comes to mind right now, just retired very recently.
Yeah.
In that same position, we had a conversation about how we can improve after their escrow adjustment happened. How we can get that back down? You know, and they were very close. This couple was very close to listing because this was their second home. They don't live here. They use it 6 months out of the year, quite literally.
Sorry.
And now they got hit so hard with the insurance that escalated into the escrow, and basically their payment went up. So much so where they had to start reconsidering. Now, thankfully, we were able to figure it out. Right? But not everyone is in that position, especially the, older retirees that don't necessarily have any more options for additional income. My clients I'm talking about, they can still hustle and do something, okay? They're freshly retired. But there's a lot of people I know that cannot afford an additional $500 a month payment.
And I think this goes back to what I was saying, and I think the same for the young hustlers, the entrepreneurs, us that still can go out there and really grind and figure it out, right? Well, we're survivors. We figure things out,
That's
right?
right.
Maybe that is maybe this is a time where some of those folks are going to have to sell and go down the street.
Yeah, go down to Northport or go down somewhere else, or just
I mean, seriously. I mean, the reality is Northport's not far. It's in my market. It's in Maciek's market.
But you know what's better than Northport that people don't talk about so often? Inglewood.
I love Inglewood.
I was in Inglewood almost all day yesterday. Right?
Yeah.
I had clients in town. They're visiting from Chicago, and we looked at anything under 350.
Yeah.
And we kind of stuck with condos first. And we were going to go into the single family home on Tuesday. Well, there was one single family home I had to show them, right? A pool home, very good condition. This couple is still in at the age where they can make some repairs themselves, paint a little, do things like that. They're mobile people that have some skill set in that trade, in that field.
I don't have any skills, and I can watch YouTube.
Yeah, and figure it out.
Yeah.
But there was a house in Inglewood for $350,000, under $349,900, still available today, and it has a pool. It's 3-bedroom, 2-bath, concrete block. Looks beautiful, except for the roof. That's the only part that looked ugly, right?
Okay.
But does no visible signs of water damage or anything like that. Just needs a little bit of a paint facelift. So people say, hey, Northport, Northport, Northport. And for some reason, some people have this, some locals have this negative association with it. But me as a real estate agent, I have been to Northport, hundreds of times. I think it is such a good option. What you can get for your money, everything is still close by. The only sacrifice you have in Northport, but Inglewood doesn't require this sacrifice, is proximity to the beach.
Bingo.
But the trade-off is the proximity to the interstate.
Right.
If you're in Inglewood, it's going to take you 25 minutes to get to the interstate. I know, I did that drive yesterday.
Sure.
But if you're in Northport, it's going to take you 25 minutes to get to the beach. Just pick your battles. Either way, like if you need to go to Tampa, you're going to drive further, or if you need to go to the beach, you're going to drive further. And I think it's still such a well-placed, location, really close to Naples, really close to Sarasota, an hour and 20 minutes to Tampa. It really should be on people's radar. It really should.
Yeah, I mean, we talked about it a little bit last time. I'm a fan of Inglewood.
Yeah.
Big time. Northport, I like Northport. It's fine. It's a great place to go to buy an affordable home. It's a great place to go to buy a really expensive home with lots of land and lots of privacy.
That's right.
Where you can have horses, and I think you can do a horse an acre there.
Okay.
Don't check with the county on that, but I'm pretty sure.
Yeah.
So beautiful horse properties, just normal houses. I'm with you though.
Yeah.
Right. If you gave me, what I get like $350,000 for being in this video with you, right?
Yeah, sure.
So if you gave me that much money and said, "Here you go," I would probably buy a place in Inglewood.
Right.
Right.
Inglewood
I
is
love
a
Inglewood.
really good option.
I like the beaches there.
And
it's
that's
awesome.
and that's the other thing you're saying. We're talking about just bringing it back to insurance. A lot of homes, like what you get for your money. Let's just say you have a $300,000 budget. Sarasota is not going to buy you much for a single family home, but over there you're going to get a newer home, not brand new, but maybe close to it. And what does that do for your insurance? Your insurance is going to be under $1,000. Like literally, you buy a $300,000 home, you're paying less than $1,000 a year on insurance because you have all the latest Florida building codes and a new roof, and you have all the carriers willing to write you. So you have options, right? So you want a specific type of insurance. Some people like to customize and pay a little more to protect what they value. And that's fine. You'll have those options. You're buying an old house that's kind of in disrepair or maybe not maintained as well. You're going to have Citizens as your option. That's the reality, So I do recommend everyone to consider those areas because it does get you a lot more for your bang for your buck.
Back to insurance for a second here too, because yesterday I was having a conversation about this, and my friend has a house in Gate East.
Okay.
Right?
Yep.
And
I
it's
love
one
that
of those
neighborhood.
houses like I do too. We talked about it last
wide
time.
roads.
Right?
Yeah, it's nice.
So I'm guessing it's probably 1983 build.
Yeah.
But he's got the new roof, the third nail, the blah 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 blah. Right?
Yeah. All the wind mitigation credits
All
they
the
can
stuff,
get.
right? And last time we talked, you were saying, yeah, but it's old. It's going to cost more. Right? They might, Are they wood frame in there?
Some of them are, but most of them are concrete.
Yeah. Okay.
Yeah.
So his new insurance that they offered him, he'd been with the same company for 17 years or something.
Mm-hmm.
Went up to like $3,200, and I'm like, wow, that's a lot. And I'm thinking about our conversation last time. You're like, yeah, old houses. You're
You're gonna pay more. That's all. You're gonna pay less for the house, more for the insurance.
But I'm going, yeah, but I like the old houses. I mean, these are 100-year structures.
Yeah.
They're supposed to be there 100 years, right?
Should
so
be.
they're not really old.
Yeah.
They're my age.
Yeah.
They're middle-aged houses.
44-year-old houses.
Right.
Yeah.
And I'll tell you what. He was like, he was a little upset. He probably would have stuck with the policy that he was offered, but the insurance agent, who he'd been with for like 17 years, didn't call him to tell him that his insurance was going up drastically. He's like, she couldn't even call me. So he found somebody else.
Yeah.
Turned out that somebody else got him a policy for like $1,200, man.
Wow.
Yeah.
Well, it
And
sounds
his
like
house is probably worth like 700,
look,
700.
if you're that friend and you're listening to this video, please make sure that you got replacement cost, not actual cash value. This is how insurance agents often gain the business. But then when a catastrophe happens or a large claim happens, they pay you. You know, you have a, let's just say, a 10-year-old roof, and they say, well, it only lasts 15. We're going to pay you only 1/3 of the replacement costs. So you get a check for $5,000, and you're like, wait.
So it's like a prorated insurance
Like
policy.
Exactly.
Listen, man, I read this week that Walmart is selling kit homes for like $9,000.
Yeah. You get one of those like build it at home.
If your house blows down, just buy one and do an owner builder permit. You'll figure it out. You know got YouTube and all everything.
And there are cool things
TikTok.
like that. There are cool things like that where you can actually and some parts of the area here do allow ancillary units to be added. I wonder if there's an opportunity in the areas zoned for they call them accessory units to be added, but one of these kit homes to be added. Pull the permits. Don't do it without permits, everyone. And
don't do anything without permits.
Yeah, do it right, But then once you have it right, your insurance will go up a little bit, but you're gonna have a brand new little construction home in the back. In case something happens, you have a backup plan. In case nothing happens, you got yourself an Airbnb or a long-term rental, whatever you choose to do, right?
Sure. Yeah, I love that. We call those casitas.
Yeah, that's right, casitas.
A little house.
I really like that you one of your first TikTok videos that you did was on Siesta Key. And not on Siesta Key, it's right over the bridge. The little mini houses. What do they call them?
Tiny
homes.
Sarasota or something.
That's right. That you got a lot of traction with that video. But aside from that, when you went in there, did you? It's a small house, guys. It's really narrow. It has like a bunk bed on top or something. It's a tiny house.
I think they say that sleeps 6 to 8.
Well, maybe children, but really, I haven't been in them yet. Would you say that as a single guy, you got to do what you got to do? That's adequate?
Oh yeah,
exactly.
All day.
Exactly.
All day.
So I asked that question.
But I do see there's other ones on Instagram that are tiny, but they're like super cool.
Yeah.
They're
of
like
course.
These capsule things.
This is all we have, right? But I was leading in with that question because one of the things that we see as agents is, especially in young home buyers, and especially when it's a couple, right? I see that they come in. We have an appointment. I bring them to this conference room. We have an appointment. We talk about their wants and their needs and their budgets and expectation setting and all that. I pull up on the laptop what we could possibly look at. And what we find is I want all of this and my budget is for all of this conversation. A lot of 25-year-olds expect to buy a house that they were raised in, that their parents own, that their parents have, bought 30 years ago. So there's like this expectation setting thing that we as agents do. But I always have this conversation, if they're like in front of me, I say, all right, I understand your needs, I understand your wants. I have a question for you, and I want you to answer individually, not as a couple. Do you want to get rich or do you want to look rich? Which one is more important to you? Believe it or not, some people just want to look rich, right? They drive fancy cars and they're living paycheck to paycheck. Those are those people. Everyone always answers, well, almost everyone answers, I want to get rich. Which brings me back to these little casita homes. Then don't buy a 3-bedroom, 2-bath, 2-car garage pool home as your first home, even if it's in Northport. Don't do it. Buy a 2-bedroom, 1-bath. Bring it down. Now I know we make less commission on that stuff, but I'm here to make you rich because that's what you said you want to do, and I'm representing your interests. So what happens is they end up buying more than they need. And when I say need, I'm using that word loosely. But they end up buying something more. Their payment is higher, obviously. And then what? And then you have to wait and save for your next down payment for your next house. That's actually going to be, like a little bigger house, a little bit bigger when you have 2 kids or something. I say, if you want to get rich, which like everyone always says they want to get rich, especially the youth of the world here, and the youths, I say buy the absolute smallest or cheapest place you can buy within reason for location. Don't compromise location necessarily. There's a certain couple street names we can name that you probably don't want to live on, because I know that street is a bad street, right? We can't name them, that's right. But we can think of where they are, and sometimes, you know, the risk to danger is not worth it, but there is a place where it is worth it. You know, so I always say, buy something you can put some sweat equity into. Buy something that's smaller than you probably want. And whatever you do, keep the payment the lowest you can. Because if you're able to afford a $2,500 payment, but you get something with a $1,200 payment, you have $1,300 every month you can put away into first repairs, but then eventually into saving up for your next down payment. And then one day you'll move out, and then you'll hopefully rent this, or you'll just sell it and you have a lot of equity on it, right? So there's something to say about that. You know, if you're already independently wealthy because you got a trust fund when you were born or something, that's different. Okay, I'm not talking to those people. I'm talking about the young couple starting their life, getting their first, second job or something. They're making, you know, maybe 40, 50,000 a year each. Nothing crazy, right? And get something smaller. Make some money with it and buy your car cash. Don't screw up your debt to income ratio with a $650 car payment. You know, and I see this over and over. What would you say to those people? Do you agree with what I'm saying?
Kind of.
Okay.
Yeah.
Where is their agreement?
Well, you know,
where is their disagreement?
I just I think it all depends on where it is that you're coming from. So I don't have really blanket statements for anybody. It's too. Everybody's got their own thing, right?
Well, here's where we're coming from. Couple,
right.
Do you want to be rich? Do you want to look rich?
I get that. I totally get that. You know, I 100% agree with you. You shouldn't. It's not it might not serve you well to compromise on location. However, I think where we are, you can't really go wrong too much with location. You know, I'm more terrified of the homes out east because they have 35 years more of building. So I know you're a big fan of new construction. I have many problems with new construction, and I sell them. You know.
Yeah, I do like them.
And I get it. I get that they're less expensive on insurance and all the benefits and the things
but you're paying full price. Right. You're always paying full price.
Right, but you're always buying a house that's going to be old.
Okay.
And looks like the other 8 models of that old house in that neighborhood. And since they have 35 or 40 years or more of building planned, there's always going to be a new neighborhood. So yours might be fancy and it's the one, right? This is it. This is
for now.
We'll call it the water place.
Yeah.
And it's got the new vibe and this cool artificially just popped up downtown and it's fancy and all this stuff. And that's great until they build the next one.
Yeah.
And then that one's old and then everybody wants to go to this one. So I feel like, I have thoughts. And sometimes those thoughts are leading me to believe that buying that new shiny thing might not be the way to go. You know, we're talking about not compromising on location. Houses out east, because in Sarasota there's not a lot of new builds. Maybe we're tearing something down and we're rebuilding. That's different.
Yeah, those are $2 million homes.
Right. So it's out east. For me, a compromise in location is going out east. Unless I'm buying 5 or 10 acres because I want extreme privacy, right? But that's not what they're building. They're building
cookie cutter
40-foot lots.
Yep.
What's the
40 to 60 maybe.
40 to 60 foot wide. That's 40 feet. Come on, man. Think about that.
That's not a lot.
40 feet wide.
I mean, I'm 6'3". I just lay down a few times.
How many times?
And I wide,
right?
you know.
So, geez, man.
I know.
That's so. you know, and then just after a little while, your house is an old house. And actually, from what I've looked at, I've studied that data quite a bit. Those houses do not appreciate as quickly as houses that have
That's correct.
great locations. Let's look at Goughgate. Goughgate, house built in 1961, man.
Yeah.
Right? When I was looking at houses in 2016, I could have bought pretty much anything I wanted in Goughgate for 250 grand.
Pretty much, yeah.
That was a updated ranch with a pool and blah 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 blah, all the stuff, right?
Yeah.
Newer roof, newer AC, new electrical, repiped, right?
Yeah.
250. What do you call that? 2,200 square feet, maybe?
That's a big house for Gulfgate, yeah, under air.
Okay.
Yeah.
So do you agree that was probably around 250,
Yeah.
maybe 300?
I agree. Yeah.
How much is that house now?
556, you know?
I think a little more.
If it has a pool, more.
Yeah.
100% more.
I think it's
not
a
100%, but I mean
$700,000
for sure.
house.
Yeah.
It's, right?
It could be.
And
yeah.
why? Because I'm not going to compromise on my home buying decision, or on the location for my home buying decision to buy brand new out east. I'm going to be as close to Siesta Key as possible.
Right.
Period.
Right. You know, as a great example to kind of follow up this train of thought.
Yeah.
In 2016, near the second half, you know, I sold a house and I bought two houses with the proceeds that I had, and one of them was on, you know, right by the North Bridge to Siesta Key on Siesta Drive, right?
Nice.
West of Trail. Great location, but a small little house, 2-bed, 1-bath, nothing fancy. And the other one is the house I live in right now, which is kind of close to the interstate and Bee Ridge and Weber area. And that's a 4-bed, 2-bath plus 2-car garage. And what happened in the appreciation? They were actually almost identical price. What happened with the appreciation on both of those? Now, first of all, which location's better?
Goughgate.
Siesta Drive.
Oh, no.
Yeah.
Siesta Drive. Yeah, absolutely.
Exactly,
yeah,
right?
West of the trail.
So much better
Sure.
of a location.
Gotcha. Yeah. Sorry, man.
Grenada Park. And what happened with that value? So I bought them at right around 250. Let's just call it 250 for each. That one on Siesta Drive appreciated from 2016, was just a while ago, probably about 3 times because of the location. Mm-hmm. Because in that location, they're tearing down old houses like mine, and they're building crazy things. And across the street from me, there's like new construction going up, you know, 2-3 story high, very large homes, right? And the one where I'm at right now only doubled. I mean, I say only. I'm extremely happy and grateful.
It only doubled.
But you know, and we're talking about location importance in this conversation. We're not talking about how much the valuation. That's less important. So location is very important. And if you're going to go, whether it's to Northport or you're going to get a small house or whatever, yes, look at location, okay? But get the small house in the best location.
Right.
Don't buy the biggest house in an okay or crappy location.
And this just lines up with why I can very clearly see why Maciek and I both like Inglewood. Mm-hmm. Because basically the same price homes as Northport, but it's by the beach.
That's right. Very close to the beach. And that beach is so
beautiful.
nice.
Yeah.
It's so nice.
You have Stump Pass,
Yeah.
Inglewood,
Yeah, Inglewood Beach.
Blind Pass, or otherwise known as Middle Beach,
Yeah.
and then Minnesota Key.
Yeah.
And the drive is beautiful. But the road is, I did check, that road is trashed.
It is, yeah?
Yeah, so this last hurricane, from
Yeah.
like, I don't know, 3 weeks ago or a month ago or a
Messed
year
up
ago.
the
I
road.
can't
It was like a month
remember
ago. Yeah.
completely tore it up. I guess there's just a portion of it that just, the water came over, it all crumbled into nothing, and I don't think it's repaired yet. If you guys know, if anybody's watching and has an update, please let me know.
Yeah, I'm curious too.
Yeah, and it's like 15 minutes from my house, or maybe 20. So, but
I mean,
take a drive out there.
Yeah, exactly. And the waters, you know, in this whole area are beautiful. It's the sand on the beach that kind of changes, and how many people are on the beach. You know, I went I had my clients yesterday, and I wanted to show them Siesta Key as we had a cancellation. We had 30 minutes to kill, so we just went to Siesta Key, and I kind of showed them the main beach point. And it was a cloudy day yesterday. It was raining when we went. It was around 3:30, and it was still packed.
Really?
So many people. It was
Wow.
like, what, not pouring rain. It was like
Yeah,
just
yesterday
drizzling,
wasn't
you know?
great weather. It was
Yeah.
nice.
It's the middle of the
it
week.
was
I
cool
mean,
out,
it's nothing. Yeah, exactly.
Huh.
But
I haven't been
all
to the
the
beach
beaches,
this week, though, so.
all the beaches here are so beautiful, you know. And the closer you can get, the better that will work out for your appreciation, you know. But I also understand those couples that just they know what their needs are. They don't care about location too much because whether it's 10 minutes or 20 minutes, it doesn't matter.
Sure.
It's 10 minutes. What, once a week maybe you go? It doesn't really matter,
But I agree
right?
with you. You know, I mean, and you know, part of this too is looking with our crystal balls at where we think there's going to be opportunity. I personally think Newtown in Sarasota is prime.
Yeah.
Prime.
For redevelopment or?
For everything.
Yeah.
I mean, you know, downtown Sarasota 10 years ago, I really didn't go there much.
Mm-hmm.
That was good, you know. But I think from 2013 just to 2017, they put up 17 mid to high rise condominiums and
Yeah.
changed downtown quite a bit.
Yeah.
And,
Rooftop bars,
right,
parking.
and then that brought in
Yep.
more businesses, more fancy restaurants, more clubs, more places to hang out, smoke
Yeah.
cigars, do Florida's kind of stuff,
You know
right?
what I feel's happening? It's like turning into a hot spot. Now, Sarasota's always been a tourist hot spot, but I find that downtown is a professional hot spot.
Oh,
you know,
yeah.
it's become a lot more of that. And that does mean that, you know, some of the restaurants are fancier, which means a little more expensive. Now, there's also options
Which also
for
means it's great to
affordability.
go there for lunch.
Yeah, that's right.
Instead-
I love
So,
going to lunch
There's
downtown.
a tip. If you're in Sarasota and you want to go and have some of our fantastic restaurants, but you don't have the budget to eat dinner, go for lunch.
Yeah.
So I love eating out.
Yeah.
Most of the time I don't eat out at night. I go to lunch because
same here.
typically the same menu, very similar.
Yeah.
Same chef, same everything. You know,
Exactly.
same quality is the word I'm looking for. But like half the price or maybe even less.
Yeah,
you know?
exactly.
So, but you know, Newtown for sure. That historically has been less expensive for the city itself compared to some of the other areas that we've talked about. But I had an office right downtown, right at 5 Points, which is some of the most expensive real estate in Sarasota per
that's
square
right.
foot.
Yeah.
You know, I'm thinking we might. I don't think $1,300 a square is insane. That means $1,300 a square foot
Yeah.
for that real estate, right?
Yeah.
And 8 minutes away, according to Google, was a house I sold in Newtown for $250,000 FHA, right? Meaning that they use the buyer used an FHA loan to purchase it, and I think that I think there's a big opportunity there for that person. I would say, I would bet a lot of money if I was allowed to. I don't know if Vegas has a thing where you can bet on how much you think a house is going to appreciate. Right?
Yeah.
But if that were a bet that I could make, what is that thing worth in 10 years?
Yeah, and I also think you have to look at, will it outpace the inflation?
I
right?
think it will.
That's really what's important. And real estate, for the entire history of the United States, has outpaced the CPI, you know, and basically like, well, how far does your money go? And as you can see all the charts of what your salary was and how much homes would cost and what your payment would be, right? And that is getting further, home ownership is getting further and further and further away. So Newtown is a real, I mean, I've invested into many properties in Newtown. That house that I sold, what I told you.
Now they all know.
Yeah, I know, but that's okay. There's so much Newtown
There's a
out
lot,
there, right?
Yeah.
I even saw a wholesale deal come across my desk 2 days ago for $149,000 on a property in Newtown. You know, they didn't disclose the address, but I would assume it's like 23rd, 25th or something like that street. You know, which goes all the way east to Tuttle, basically. After Tuttle, it's a different neighborhood. happen. But from the water, like there's some places really close to the water, and all of them are close to downtown. So if you want to have that little active lifestyle and go a downtown, whether you're a bar hopper or you just work downtown or something,
Right.
Newtown is a place that has shifted quite a bit in terms of the redevelopment that's happened. I've seen a lot of houses get flipped, and I've also seen a whole bunch of houses get torn down because they were 100 and something years old and falling apart. So they got torn down and something new built in that place. So I do agree with you. Newtown is a good investment for like the 1 to 2 decade time frame.
Yeah, buy and hold, right?
Exactly.
So, or buy and live there and hold it, right? And one thing when you were telling me about your folks, and do you want to look rich or get rich, right?
Yeah.
I some people think I'm absolutely crazy for saying this, but I sell real estate for a living. I personally don't think that anybody should sell real estate,
Right.
unless there's a real good reason to sell it.
Yeah.
For instance, I'm a homeowner, and I like my house. I'm not sure if I love it. It's not my forever home, right? However, I won't be buying my next property until I can afford to buy another property. Not buy another property because I'm selling this property.
Right. That is the most common route. People sell and then they go buy. But won't that, if everyone adopts that mindset, let's just say all of America adopts that mindset, wouldn't that mean that there would be less and less homes for sale? Because no one's listing?
Yeah, and you know what? Maybe.
And what would that do to pricing?
Maybe I am old enough to run for office now, so maybe that's
Cast your vote.
Maybe that's the kind of long-term fiscal responsibility that would really serve us well. I'm not political. I'm totally joking. No way.
Yeah, but that would cause an inventory shortage worse than we have right now.
Right. Yeah, it would. And you know what? And then people could get creative.
Yeah.
They could buy lots. People can build their own home.
Yeah.
Owner builder permit is a real thing.
That's right.
You're allowed to do that.
Yep.
There's some rules with it. I think you have to own it and live in it.
And live in it for 12
years.
months.
Is it 12
That's
months?
For Sarasota County, yeah.
And then you could sell it if you wanted to. But again, I don't believe in selling real estate.
Yeah.
I understand people have to sell real estate.
Yeah,
of
course.
They're sick and their family lives up north, or
life happens, right?
or they need. I always joke, and I should probably stop this joke, but I go, I'll sell one of my houses when I need a new kidney, right? Because I think kidneys are expensive.
Yeah, I'm pretty sure they are. Yeah. Well, let's actually talk about this. What you're talking about now is, just holding the real estate if you can, right? And your next one will be hopefully a purchase when you're ready, and you will keep this one, right? But what I have here is our latest market update. It came out yesterday, guys. So I know that you haven't really dug super deep into this stuff. Now we have 5 metrics that we cover, right? So I just kind of want to see what your opinion is. I have my opinion. I want to see what Brian's opinion is. So one of them, the first one, is total closed sales. Now this is for the Sarasota and Manatee County area, right? And when we're talking about total closed sales, it's in 1 month period. Now this is the month of August. We're at the end of September right now. They always release it a little late, compared to the month of July. And what happened from July to August? And what they're saying is we had 1,782 in August, but we only had 10 less in July. So 0.5% increase month over month. Does that say anything to you when you look at the time of the year? It's summertime. When you look at it, it's a 0.5% increase, right? More, 0.5% more. Does this ring any bells or any alarms for you?
No.
No, me neither.
No. It doesn't really matter. My job is to connect buyers and sellers. That's it.
Okay.
I'll be honest with you. I take a look at that stuff. I don't care about it too much, though.
Okay.
It doesn't matter.
Okay. Because when someone has a need,
with my job.
Yeah, when someone has a need,
right,
we're here to help them. We're either marketing for you, or we're researching for you and finding houses, right? And then showing you those houses.
That's it. So, now telling me though, I mean, I do read and I pay attention to the business very much. Seeing that there was an increase from August sales over July, that's great. Because isn't typically August and September our slowest months anyway?
That's correct.
So that means our slowest month outperformed a month that typically outperforms our slowest month.
Right.
High five.
Yeah, exactly. Now, unfortunately, from June to July, the prior market report, we dropped 20%.
Yeah.
That's very significant.
Yeah, but. And I don't like buts, right? But I think in June, that was around May, right? They're next to each other.
Yeah.
And isn't that when they were talking about the debt ceiling stuff, like every day?
And what about our tourism industry, right? Like there's people buy more during the winter months and then slow down for Florida, right? The rest of the country is totally opposite from us.
I know nothing about the rest of the country.
Yeah, I don't know anything there either.
I only leave state once a year or something.
Yeah, so I think we agree. This is not that significant. Our job doesn't really have to do with that, but if you're a seller and you're coming to ask for advice because you're maybe considering, moving to North Carolina or something along those lines, then what can we tell you? Well, we can tell you that we had a big decline for when the summer started, and then not much changed month over month. That's all. It's kind of like the same in that,
totally.
From that perspective.
And back to that, and I guess why I don't really pay attention to that one in particular is because we have these little pockets. All these little communities are different, I mean, you could take a neighborhood like mine. I live in Stony Brook, Venice. I think there might be one house on the market right now. I could be wrong. I didn't check this morning, but there's not a lot. There's like nothing. So when there is something, it's gone.
It's gone. Yeah.
So we're still, an extreme seller's market.
Yeah.
Because there's no inventory and people like the neighborhood that I live in.
That's right.
So that doesn't matter.
That's right. And that does lead me to one of the other metrics, which is the total months of inventory, right? When we realtors like to have some data, and one of the data points that's really important is how long will it take to sell everything when all the listings stop listing, if all the listings stop, new listings stop, and all the buyers right now buy, how long will that take? I have no idea how they measure this too. But what we had this month is pretty much across the board for single family homes and condos, Sarasota County and Manatee County. We are 3% longer on average. Some it's a 2.9, some 3.7, whatever. So it takes 3.9% longer. Is that a big number? It's 3.9% longer month over month.
Than the month before.
Yeah.
So 4% almost? We're talking?
No, 3 on average. 3% longer.
That's it.
I just say, yeah.
So it takes 3% longer to sell your house this month than it did last month?
Right.
Whatever, man.
Exactly. Whatever. Now, where it does
they're writing
matter,
all kinds of stories about that too.
Yeah, but where it does matter is over 12 months. If we have 3% over 12 months, well, that starts compounding.
Sure.
Right? Adding up is one thing. Compounding is quite another, and that's like
they
say.
Is that you?
They say that
the magic. Him. He's like 12 feet tall. I am not.
So I don't think that's very relevant. One thing that was pretty significant though, which is the days list the contract. So when you list as a seller, how long does it take before you get in hand a contract that is fully executed by a buyer and seller, right? What do you think that is right now in our area?
Condos or houses?
Good question. I have metrics for both. So let's just say houses.
So my guess would be the time for homes, single family, is longer than
condos.
condos.
Than condos?
Is my guess right?
No.
What?
Yeah, and the reason is because we have a larger inventory of condos.
Okay.
There's always more condos for sale than there are houses.
More choices.
So more choices, exactly. Because snowbirds will buy a lot of snowbirds buy condos because they're
Sure.
a lot cheaper. More people get into
And you
it
don't
and
have
get
to do
started.
anything.
Right, and
Right.
exactly all year. So
I do like condos and townhomes.
yeah, I honestly like everything. I even like vacant land. I mean, I like it all, But like when it comes to for my situation right now at 44 years old with a family with 2 kids, single family home makes sense for me because we got too
Sure.
many cars for condos, But this metric was very surprising this month. We had Sarasota County especially. How long it took? Well, it went from 25 days for single family homes to 31 days that it's going to sit on the market. Is 31 days long?
No.
No.
That's ridiculous.
It's
I mean,
ridiculously
that
short.
That seems to be a seller's market, man. I mean,
Exactly.
I know they like to measure whether it's a buyer, sellers, or balanced market. We talked about this last time. 6 months time on market is kind of a balanced market. Less than that is a seller's market.
That's
More
right.
than that is a buyer's market. And I pointed out that because I do know on Siesta Key, it is a buyer's market for a single family home on Siesta Key.
100%.
Go buy a house on Siesta Key if you got
can
the coin
negotiate
to
that.
do it.
You got to negotiate
You've
that.
got a lot of power right now as a
right.
buyer. So call me, call Maciek, call one of
Yep.
us, or somebody else that makes more sense for you. But
Yeah.
we're good.
Yeah, but you're right though. The luxury market, which Siesta Key is a luxury market, they sit longer, right?
Yeah, I think
but
we're over 9 months right now. On
right, and they're
single
probably
family.
bringing these numbers up,
Sure.
right? So
well, and those numbers though, is that include? Oh, those do not include vacant land.
correct. These are just condos and single family homes.
That's good.
Yeah.
Because I know a major publication in New York wrote an article saying about how Sarasota was in so much trouble because now they have all these listings that are not selling, but they were including commercial and vacant land. And we had spoke a little bit about Northport. I just want to remind everybody, Northport is the second largest city by land mass in Florida.
Is that right?
Yeah, only Jacksonville's bigger.
Interesting. I didn't know that.
It's ginormous.
Yeah, it is very big.
It's
yeah,
the Texas of
of our
cities.
local area. Yeah,
And there's so many vacant lands
Vacant
for
lots,
sale.
yep.
Lots for sale
That's
right
right.
now. It's
and they're going for about $20,000 to $30,000.
I remember when
right?
they were $5,000.
I bought one
all day long.
I bought one time for $4,500, and I sold it on eBay for $7,000 the next day.
Oh wow! So
Yeah.
the funny thing about that though is people in 1970 bought it for $4,000.
Yeah,
So vacant land is really a tricky thing to see because that is the one product I've seen in real estate, at least here locally, that it might not appreciate at all. Even
That's true.
even over a very 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 long
Yeah.
portion of time. It's just this past couple of years that raised the price of the land value. 20
Yeah.
grand for a lot. Is that what they are?
20 to 30, yeah.
With
in,
electric?
in Northport. No, it depends. Some of them have electric available at the
That
street.
probably changes the price. What?
Yes.
How much?
Of course. Honestly, I don't know exactly, but I'd probably say at least 5 to 10.
Is that
'cause,
about what it costs? I've never hooked.
I don't know.
electric
I've
to
never
a
hooked up. No, I don't know.
Uses eBay and
Yeah, but Northport is a good place to build, right? There's a lot of new construction happening in Northport because they allow a little bit more, and the lots are big. They have 10,000 square foot lots, and I love that. Like, what area do you know that has 10,000 square foot lots? Maybe Gulfgate East. Like that's where
Probably
from the
pretty close.
80s, but there's no lots there.
Sure.
That's the problem, right? So that is good. And when it comes to the days to list a contract, if you're a seller, we had a 24% increase for single family home, but it only went from 25 to 31 days. I mean, you're going to be sitting for 31 days if you're priced right and marketed right before you have a contract. That's nothing, in my opinion. Not too long ago, a decade ago, we were talking about if you're even going to get an offer.
Yeah,
Now we're talking about 31 days to get a contract, not
That's
an
a
offer.
crazy number to me. I think part of it is just because, and I sell everything. As long as it fits into my 4 rules of business, I'll sell it. But lately, I've been kind of working on this $1 million plus inventory. I have a listing there. I have a few buyers in there, and those numbers are longer. It's just it's much longer, and then you break it down. by bedrooms and bathrooms. A 4-bedroom, 2-bath home in 34231, that's a zip code, or 34293, that's a zip code, or 34238.
Yep.
If it's 4 bedrooms with 2 bathrooms, that's about 165 days till it closes.
Is that right?
Yeah.
Wow.
Yeah.
That's a lot longer than.
But if you made that
Here.
a 3-bedroom or a 3-bathroom, it's like 120 days.
Interesting.
Right? So, these broad numbers, they're neat to look at, and we can tell people stuff about them. I'm not dissing your game, man. I
get it. I'm a numbers guy. I'm very statistics oriented.
It comes from a lot of this data. All the data that we get, I think, I don't want to say all, but much of the data is from the board of realtors.
Yeah.
And I like that. When I look at it, I really like to all right, so what's all this stuff? And let's look at this individual property. And that goes back to my job is to connect buyers and sellers.
Yeah.
Right? So, I have people ask me, how are you going to sell my house? I'm like, I'm going to market it first.
Yeah.
I can't sell it if I'm not marketing it,
Yeah.
I mean, I could put there's my phone. It's right there. We're looking at it. I could put that, I could make that phone and ask $1 for it, right? And that's I don't know how much they cost anymore.
A lot more.
A lot.
It'll sell quick.
Right? But it won't sell.
Why?
If it's not marketed.
Oh, if you don't market, yeah, that's right. That's right. You need to market it. Yeah. But you're right though. Like if people don't price things right, and it's very specific to the home itself, not just the neighborhood. Although sometimes it's easy to price it. Sometimes you have all these different houses that are so similar to yours in a very close proximity. Sometimes, you got this unique little thing in the middle of all these other things, and it's not easy to price.
I mean, the unique stuff seems to be the stuff that I'm picking up right now.
Yeah,
I don't know about you. I'm not sure what you're showing.
Yeah, I got a unique one right now.
I got a 10,000 square foot home with over an acre, and it's amazing and incredible and very grand with formal sitting rooms and 17-foot ceilings, and it's amazing. And I go to comp it, and there's nothing. 2 years back. I'm going 2 years back in the sales.
Yeah,
There's nothing.
Not easy.
Nothing that's not on the water. But
Right.
this house isn't on the water.
Yeah, exactly.
So what's it worth?
Yeah, you got to
right?
start breaking it down to the house and then the land. How much is an acre worth?
Wild.
The redevelopment costs. You can build some houses and just the redevelopment costs might be
and I looked at the zoning. It looks like you might be able to put 3 houses there. Right?
Okay.
So,
Okay. Still not enough.
But the house is so amazing. It's you wouldn't tear it. It's not a tear down either.
Yeah, I might have a client for that one actually.
Okay,
We'll
good.
talk about it after
Nice.
this. So that's kind of what I wanted to go over. We have a couple other metrics that are a little less important, But last one, just real quick, is our inventory went up slightly, but our inventory is low. It's not a specific metric here I'm referencing. And by the way, if you want to get my report, I mail these out to people. Just reach out to me. Write me an email. It's sarasota@sarasota.com. That easy, okay? Sarasota@sarasota.com. And I'll put you on the mailing list. But when it comes to the inventory, it's
How do
low.
I get on there? Sarasota.
Yes, Sarasota. Lots of Sarasotas.
I like it. No.
But listen, the inventory is still low, right? That's what I'm seeing.
We have low inventory.
I had these
There's
clients
lots
yesterday.
of reasons why.
That's right. We talked about that last time, But I had clients yesterday, and in one day, it was a full day of showings.
Mm-hmm.
We looked at every single option for them. They flew down from Chicago. We saw every single option in one day. And that means that there's low inventory. So if you're thinking about selling, talk to somebody. Talk to us. Talk to someone else. Doesn't matter. What matters is that I have clients. You have clients. We can't find them what they want, with every checkbox checked. So this is still out there. So we don't know where the future will hold. Thankfully, the last thing I want to touch on is the interest rates. We had the FOMC meeting just a couple days ago, and they voted not to raise the interest rate. And maybe in November they will raise the interest rate, probably in November, because stock market's not doing too well this last couple days because of that announcement, right? So, do you think that's going to help some people take the step into buying that they've been thinking maybe yes, maybe not? They're not going down, those interest rates.
Yeah,
I
know. I read that article, probably a similar one. They're talking about raising in November, And they said that the chairman, I think, also said that I'm paraphrasing here, that they don't plan on having any decreases next year.
Interesting. I didn't hear about that, but interesting.
So I think that comment though beat up the mortgage-backed securities folks or movement on Friday, and rates took a hit for that. So even though the Fed rate didn't go up, the mortgage interest rates went up on Friday.
Yeah, interesting.
Yeah.
I don't know what will happen, right? And if rates go down and you're in a high interest rate, just refinance. Go talk to your lender about that. But I don't think that people should be sitting on the fence when they know that in the next year or two they're going to need to move and buy a house, or they will want to move and buy a house. I don't think you should just sit around and not do it now. Because when the interest rates fall, there's a whole bunch of you sitting on the fence that are going to get off the fence. And what happens when we have low inventory, like our report shows, and we have a quick decline in interest rates? We have a frenzy and prices go up. So don't do that. Don't wait. Just get what you need for right now. It's not an investment. It's your home, right? It's not an investment. If it's an investment, then let's crunch some numbers. And I invest, and we can talk about that, right? But for your home, you need a roof over your head. Don't worry about the rates. The worst case scenario is that you won't be able to refinance and you can afford the current payment. That's the worst case scenario.
Yeah, I mean, I am an absolute proponent of buying right now. If you can buy.
Me too.
Especially if you are a renter, you have to buy.
Yeah.
Or you're making a giant mistake, like a huge mistake, like the biggest mistake that you can make. And I promise you will look back and go, that guy was right. And the reason that I say this and I mean it is because what are people paying for rent around here? $2,200?
At least.
$2,200 for like a 2-bedroom.
I mean, go to
something.
Bradenton for under $2,000, and then you're possibly in Onico, an area that may not be favorable.
So, but Sarasota, you're at least 20,
at least $2,200.
Okay, so
that's not average.
So you're a renter. You're paying $2,200, and maybe even a little more, or whatever. Maybe yeah. I mean, I know like the water side, they're 1 bedroom. They're $3,000. They start at $2,500. They're $3,000. Right. So, and what I'm hearing from those people is, oh, well, no, I can't buy, I don't have any money. Well, let me tell you what, the mortgage companies, because the interest rates are higher than we're used to, not higher historically, just higher than we're used to.
That's right.
Right? They are getting very, very creative and coming out. I'm going to tell you right now, I got a buyer who's paying, I think, $2,200 or $2,300 a month for rent right now.
Okay.
They have very little money to put down, like $10,000, and they want to buy a house. There's an FHA product, and then the company internally has some sort of boost that's a second, but it's very fair terms, fixed rates.
Or they give a second mortgage for
like 10 years or something. At a low, it's not a bad interest rate.
But then they need to qualify on that payment thing.
So, right, but they're paying that right now.
It doesn't matter.
No, I'm saying
the qualifications
I understand that,
are different.
But I'm saying, so their DTI, their debt to income ratios, all those things are in line. These are responsible people, but they can't save money because their payment's high.
Yeah.
Right? And they're only able to save a little, so they don't have a lot of money to put down. But these people, they put $5,000 in escrow on a $300,000 house. Pretty normal.
Normal, yeah.
Right? And then I asked the lender, and I never get into people's finances or whatever, but I'm like, hey, how much are they going to have to come up with at closing?
The cash to close estimate.
Yeah, and actually on this house, we are paying a certain number, but we also asked for 3% back.
Great.
In closing costs.
Yeah, great.
So with that 3%, with this boost program, with all the things, all the creative stuff that they weren't offering 2 years ago.
That's right.
Right?
And even if they were, no one is accepting that offer.
Right. So now I'm under contract, getting a concession back for closing costs, plus this really creative program, And he goes, they're going to get all their money back.
What?
They're going to be nothing out of pocket.
To buy a house?
They're getting $5,000 back, man. And then he's using the rest
Wow.
of the money and the credits to buy down the rate and stuff.
Wow.
Yeah.
That's a good story right
so
there.
So that story, that doesn't go away. They get to keep that.
Yeah.
All that stuff's a fixed thing. This is a done deal. They can't change it. Guess what? When, and I don't know when, I hear mortgage people go, well, next year they'll be cheaper. I'm like, you don't know that.
You don't know that.
They don't know that.
But when, they do.
But they will. They will
That's
be
right.
less.
That's
right?
right.
And when that happens, and I agree with you wholeheartedly, 100%, man. This is a home. This is a home.
That's right.
You know, does your home ultimately become some sort of investment? Yeah, when you have equity in it.
That's right.
Right? So, but you're talking about a home. And I agree with you. They should buy a smaller home if they can't afford the big home. And that's responsible.
Yeah, even
right?
if they can afford
you know,
a little bigger.
And I don't believe that people should keep up with the Joneses. I think that's ridiculous.
Yeah, that's right.
You know, however, live your life. I'm not going to tell you not to do it.
I mean, look, we all have different values,
Yeah.
right? You're gonna make a decision for based on your values. I'm gonna make one for mine and my needs, right?
Yeah.
So, and that's okay. We're not judging you if you want to flaunt a little bit, right? It's
Sure.
okay. We all have
But,
something.
You know, I'll tell you, I've been working with some buyers recently, and the nice thing is we're not running to these houses. You know, and we're scheduling showings a week out.
Yep. I scheduled these
And I'm
showings
laughing.
from yesterday, a couple of days ago, you know.
I'm-
Only one went under contract.
I'm laughing because Maciek and I, for the last couple of years, we're in like the trenches, man.
Yeah.
It's like you put your head up and your helmet got knocked off.
That's right. That's right.
You know?
This was a war zone. It was
and you're
very
like,
difficult.
Is that house still there? No, it's gone.
Nope.
What happened to it?
That's right. The sign didn't even get put out.
Yeah,
you know?
man. So this is a nice market for buyers. I think it's a great market for buyers. You know, when we talk about sellers, though, I don't think anybody should sell real estate.
Yeah.
Right? But people are going to sell real estate. They're going to sell it because their job's taking them somewhere else, because there was a divorce, because there was a death, because they can no longer take care of themselves and they need family to help take care of them, or maybe because their insurance premium went up so much they can't afford it. They
Right.
literally can't afford it. And I know it's nice for me to say, well, yeah, go get a job driving DoorDash too. Well, they also have kids at home, and there's childcare expenses, and maybe they're a single parent, or who knows?
Yeah.
There could be a gazillion things, right?
that's
I know
right.
that's always easy to say. I can tell you that I figured out a way a few times now, you know?
Yeah.
But now is a wonderful time to buy. Do I think you should sell? I always tell people I think if it makes sense for you to sell, then you should sell,
Yeah.
right?
But you should look at all the options.
Yeah.
You know.
Yeah.
So, Brian, I just want to say thanks. I'm so glad we're doing this podcast here. If you guys have any questions, please write a comment below, and we'll give you all the contact info to reach out to both of us. Thanks so much.
Hey, you guys are awesome. And you're awesome too.
Yeah, you too, man.
High fives.